Good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork, and happy Friday. It's February 26th. Wow, end of the month here. Hey, we got a bit of economic news releases to go over today, so we're going to jump right into it, and we'll start off with the GDP, or gross domestic product, for the fourth quarter. So on the GDP reportings we get in the quarter, they'll do three. Each month we'll have a revision. So this is the second edition of this, and then we'll have the final next month. But the first edition came out at 0.7%, which is pretty good. They thought the forecast was supposed to come down a little bit to 0.4. It came in at 1%. Now, something to read into that is they're kind of projecting, kind of looking at the overall numbers, and they're saying that some of this we could expect maybe a lower first quarter GDP, primarily because it looks like some of the stuff, the goods that came in weren't exactly sold. So this is what could be driving the GDP, what boosted it, but it may be kind of a false reporting in the sense that it's like wholesale, that on the wholesale side of things, where retailers and them didn't sell a lot of their goods, so they're kind of holding on to it, which could reduce that of first quarters coming up ahead. So this is something to kind of keep an eye on, but overall, not a bad number here. We also got the final number for consumer sentiment for the month of February. So we had a 90.7, which we're supposed to stay in that range, and it went up slightly to 91.7. So if you remember, we had a consumer confidence which went down, but consumer sentiment kind of stayed in the same range, but had a slight uptick a little bit. Personal income, we're seeing people making more money, which is a good sign. 0.3% back in December, and forecast is supposed to be at 0.4, and it jumped up to 0.5. On the other hand, people are making more money, and they're also spending more money. So we had very slow in 0.1% in December, and it was supposed to go up to 0.4, and again, it went up to 0.5%. So people are spending; they're making more money and they're spending more, but they're also we're also seeing that they're saving more, which is a good sign too. We need, even though we need the economy moving, people spending, but the U.S. is one of the worst in terms of saving. Of course, saving is always a good thing for your overall. For self-serving purposes. We got core inflation here at this is when you strip out food and energy with the PC, this is the Fed's favorite gauge, personal consumption expenditure. We got, which is also known as core inflation. We had a 0.1% reading back in December. In January, it was supposed to go up to 0.2, and it exceeded that 0.3%. So this bumps us up at almost about 1.7% year over year, which is getting us closer to the 2% mark that the Fed would like to get us to. And now this is going to be something that the investors are going to be watching, primarily because since we're inching closer, perhaps the Fed may go ahead and raise rates, where before things weren't looking so good. And right now numbers are looking not as bad as we were initially thinking. So maybe that the Fed may have another rate hike this year. So we'll have to kind of wait and see, keep this in perspective. But that's getting us closer to where we need to go. And a lot of that is increase in housing expenses from rent and home prices going up and people buying more expensive homes, to healthcare costs, which is driving up the core inflation, especially when we have food and energy. Been kind of very volatile, and a lot of costs have gone down because of lower energy prices. Let's take a look here. We got the markets up right now. They liked that the oil price went up a little bit today, and yesterday they kind of were dipping a little bit in the morning when we first did it, but then they kind of came back a little bit later in the day. So that's why you saw a little bit of a turnaround in the stock market and the bond market. And then some things that could potentially come out. There's the G20 meeting, so investors are going to be watching this to see what news comes out on a global level, because there's been concern about how globally, like China and Europe, how they're doing on a global level. If there's any, and also probably want to keep an eye on for Europe, especially when there's talk about potential stimulus packages coming in March. So they're going to probably keep an eye on those. So that could eventually rattle the markets if there's anything out there that could, that might rattle their cages, so to speak. So as a result, the bond market, since the stock market's up, the bond market's pulled back. We're down about 22 basis points, which brings us below the 10-day and the 25-day moving average. This also means that rates of pricing for interest rates have climbed today as a result of that. All right, folks. So rates are a little bit worse today compared to where we were yesterday. Stock market's up. And hope you guys have a great coming weekend here. We're having some beautiful weather in Southern California here, so hopefully where you guys are at, you guys are able to enjoy your weekend as well. Have a wonderful day. Thanks so much for watching. We'll see you on Monday. Take care.